Hi guys, I'm Chris,
I'm Jimmy.
and we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week. So let's look at how my stock picks are doing so far. My two stocks currently are Devon Energy and JP Morgan. After spending $2,000 in, we have lost about $76. I think I'm okay with that.
Yeah, considering the market right now, it could be a lot worse.
Yep. And also, these two picks are dividend stocks, so I'm hoping to recoup some of that as the dividends come in.
You're not going to see that in the stock price necessarily.
Right. And as for your picks, your two picks so far are AMD and ConocoPhillips. And you are down only $55 or $56.
So I'm winning.
Yeah. So let's talk about my stock pick for last week. So last week I bought Bank of America. I can tell you a few reasons why I bought Bank of America. So the first reason is that Bank of America, if you look at sort of the 5-year trend, it's sort of back at where it's been. So I think that relatively speaking, it's a good price to try to get in there.
Yeah, so it's definitely a good price right now, that's for sure. It's even gone down a little bit over the 5-year mark.
Yep.
Yeah.
So that's one. My second is that if people want to buy stocks on the low or they're looking for a buying opportunity, I think this is the buying opportunity for banks. Right? When people are scared, when people are thinking about a potential financial crisis, like what better time is there to buy banks?
Right.
I don't think you can say like, oh, look for good buying opportunities, and at the same time saying like, oh, I'm not going to buy it when people are panicking.
Right. It might seem kind of counterintuitive based on how it's performing right now, but we're kind of basing it on the general investor psychology. Is they're going to be pulling their money out because they're scared. We're going to be putting money in and getting it at a good price, because when it goes down, then people are going to think it's a good buy and put money in, and it starts to go back up. So we're getting it essentially at a sale price right now.
Yeah. So for this channel and for our portfolio, I want my picks to sort of feel very uncomfortable when I make them, right? Like I'm trying to find good stocks at a good opportunity, and I think that I'm going to try to challenge myself to buy stocks when I'm a bit uncomfortable or other people are a bit uncomfortable with the stock choice. That being said, I still want the stock to be a quality company, right? I'm not buying super risky stocks or these companies that just puffed out of thin air, right? Bank of America, huge bank, solid company.
Yeah, I mean, we've seen what happens when people kind of invest in like hype stocks. They invest in Tesla when it's going up and then it goes down. They invest in ARK, like me, when it's going up and then it goes down or something like that. So we're not basing it just on the hype or kind of the momentum of the stock. We're basing it on how we actually think the performance of the stock is doing and the price of the stock and a few other factors like dividends or the growth rate of the stock.
Yeah. Okay, my third reason is that if you think bank stocks are just going to go a ton lower, and if you do think so, you probably think that we might see a repeat of the 2008-2009 financial crisis, right? Like banks just fall apart. Large banks, small banks, they all fall apart. If that's the working theory, then your money or our money should be in gold and not in stocks, not in bonds, because if the banks fail, basically every single thing, like everything is just going to collapse.
Right.
So that's not my working theory, and I think that like Bank of America, huge bank, it should be okay. So if I'm screwed with that pick, we're all screwed a lot more.
Yeah.
Right? So again, that's another reason.
Yeah, this is kind of the bottom card in the house of cards. I mean, and we saw in 2008 what happened when everything started to crash. The government kind of stepped in and helped out a little bit because they know what would have happened if they did let the entire thing collapse, basically. So I feel like if it does get too bad, really someone's going to step in and kind of take that on a little bit, which is probably not a good way to think about it, but we do have that safety net there. And also, we've already seen it happen once. And we can see with the collapse of the Silicon Valley Bank that they've already started to take actions to prevent this crisis from happening. So I think they learned from 2008. So I don't think we're going to see it get that bad. I mean, people might be thinking, having flashbacks of 2008, and that might be why they're pulling their money out right now. But I don't think that's what's going to happen at all.
So that brings me to my next point is that I think that if you think a horrible recession is coming and like everything is just gonna like crash, fall apart, like doomsday or something like that, right? Like if the government steps in, and I mean they don't want to, right? And you shouldn't like people should not count
Yeah,
on
you
the
shouldn't
government,
rely on that at
right?
all. Yeah.
If they step in for anything, they're going to step in for the banks.
Right. Yeah, because
Right.
I mean, like I said, it's the linchpin, like it's the cornerstone of the economy, really. I
Right.
mean, they hold all the money, they hold all the investments.
Right.
Everything is kind of based around banks at this point, so really they have to be supported.
Right. If Tesla crashes and burns, is the government going to step in? No. Right?
Yeah.
Right. So there's like tons of companies that are equally big, equally solid, whatever, right? If everything like crashes and burns, the government's only going to go in and save one thing, right? They're not going to save like GM, they're not going to save Ford, Toyota, they're not going to save Apple, Microsoft, right?
Yeah.
They're going to save like the banks.
Right.
You know, take that reason for whatever it's worth, right?
Yeah.
But I think that is a reason, or at least one of my reasons why I chose it. And my last reason is that people think that since the collapse of Silicon Valley banks, there's going to be new regulations in place, right? Stricter policies, and banks are going to have to hold more liquidity, right? They can't be as risky, and if they're not going to be as risky, they can't make as much of a profit as they used to.
Yeah,
right?
that's kind of what we've seen over the last several years, and kind of what happened in 2008 is
Right.
basically the banks were giving out subprime mortgages, and people didn't really realize that. They just kept throwing money at it because they thought it was good, and everybody was saying this is a good thing. And then it all just collapsed. So this is kind of what's been happening over the last several years and why we've seen kind of the big increase in stock prices and everything, really, because everybody's just been throwing money at it. Banks have been lending money left and right with low interest rates.
Right.
And that type of lending usually leads to something like what we have now with like a recession maybe, or kind of just a pullback in the market. They were too risky. Some of the investments fell through, and now they're having to be more conservative. So I think that's what we're seeing more than a full-blown recession.
Right. So I think that the new regulations, I don't think they're going to impact the biggest banks like JP Morgan, Wells Fargo, Bank of America, because these regulations were already in place for the big banks after 2008, 2009, right? Like these big banks had to be super safe, they had to be super secure, and I think that the new regulations that's eventually coming is going to affect more of the smaller and regional banks.
Right.
You know, I think that the big banks are going to be relatively safe.
Right.
And that's why I bought it. I think now's the time. And I'm hoping that I'm right.
Right.
Okay, so let's talk about some of the reasons why maybe now's not a good time for Bank of America.
Yeah. I would say probably one of the not great reasons is, I mean, it is kind of a dividend stock. It hasn't been growing very much over the past several years. I mean, with the big companies, you don't expect a ton of growth because they've already had all that growth. They're already gigantic. They can't get much bigger. And as far as the dividend goes, it's really not great. I mean,
It's not.
Yeah, it's nothing to write home about. I mean, it's decent. It's nice to have. It's nice to get the dividend, but it's really not that great, and you're really not getting much growth either. It's a safe investment, I would say, but you're not getting a lot from the dividend. You're not getting a lot in growth either. So it's kind of meh in that regard.
It's funny because bank stocks are supposed to be defensive, right? They're supposed to be solid. You're not going to get a lot of growth. You just have this like small, steady dividend. But now they're risky, but also defensive.
Right.
So, and both are generally not very fun or exciting or good, right? People like growth stocks, people like things that are gonna like 2x, 5x or whatever in the future. Bank stocks are not that.
Yeah.
And for some reason now they're also risky.
Right. Yeah, and I mean the revenue for the bank has also gone down, which is not generally a good thing for banks. I mean, year over year, they're -1%, which is not good. I mean, the sector median is 4%, so they're underperforming the sector. Their 5-year average is 2%, so they're underperforming themselves. So they're not doing too good revenue-wise right now, which could mean there's a big upside potentially. You know, if they turn things around or if they get a big contract, there's a lot of room for some upside to it.
Yeah.
And I mean, really, they're not doing that bad. I mean, the 5-year average was only 2%, so they're only slightly down from that. The sector median is only 4%, so they're only slightly down from that.
Yeah.
So again, kind of growth-wise, it's meh. The dividend is meh. So I mean, the biggest con that I have is it's meh. I mean, Chase, I feel like is probably, if I were going to choose one bank stock, it would be Chase over Bank of America. Honestly, maybe you'll get more upside from Bank of America though.
Right. So that's why I bought J.P. Morgan 2 weeks ago, and I bought Bank of America now to diversify a bit. I admit that I like Chase more, but I think the upside potential for Bank of America is higher.
Right. Yeah. So maybe if you were designing a portfolio and you didn't have to necessarily do $1,000 each time, I might do, put more money in Chase and then put some money in Bank of America. So if Bank of America does blow up, well, you get a big return, but you also don't risk as much if it doesn't, and then you have the solid investment in Chase.
Yeah. I have a feeling that we've sort of are teetering out the bottom of the financial stocks, and I'm hoping like the rest of the year we see them steadily climb back towards.
I think they're going to start to grow towards like quarter 3, quarter 4. I think they're going to see a huge return, and we're going to see that 5-year average probably turn into a positive number, I think, at that point, because really what we're seeing in the chart is we had a huge dip because of COVID. We had the huge increase, and now we're having a little bit of a dip, and I think it's going to continue to go up after that. So I think we're going to see over 10 years, it's just going to keep going up.
Pretty much at this point, all they need to do is recover.
Yeah.
Right? Like we would be making a profit if basically they just recovered to what they were 6 months ago or something.
Right.
So we bought 35 shares of Bank of America at $28.17 a share. That puts our total to $985. So a little less than 1,000, which is fine because the previous weeks I spent more than 1,000. So now I'm probably more even there. But excited to see how this goes. Okay, I think that wraps up for this one. Yeah. Please like and subscribe, guys, and follow along as we put more money.
Maybe we'll make money one day.
All right, bye.